U.S. stocks ended mostly lower on Wednesday after a wave of weak economic data deepened worries that the Federal Reserve's rapid interest rate hikes might tip the economy into a recession. The Dow gained 0.25%, while the S&P 500 dropped 0.25%, and the Nasdaq shed more than 1%. Driving the recession fears, the ADP National Employment Report showed U.S. private employers hired far fewer workers than expected in March. That followed Tuesday's weak job openings data. In recent months, bad news has been good news for investors who cheered weak economic data on the belief it might mean the Fed's interest rate hikes to tame inflation were working and that the central bank could ease up on its campaign. But that dynamic appears to be shifting, says Philip Palumbo, CEO and Chief Investment Officer of Palumbo Wealth Management.
So we saw in the first quarter is just the quantity and the amount percentage-wise that the 10-year went down is almost the exact amount that the S&P 500 and Nasdaq went up. So it's more of a function of rates going down than necessarily fundamentals, which is really going to be front and center for 2023 and going to be the reason why we either retest where we saw last year or even go lower than that.
Chip maker NVIDIA dropped more than 2% after Google said the supercomputers it uses to train its artificial intelligence models were faster and more power efficient than comparable components made by NVIDIA. Tesla fell more than 3.5%, while Amazon and Apple each declined more than 1%, pulling down the Nasdaq and reversing gains in some of Wall Street's most valuable companies in recent weeks. And Caterpillar, viewed as a bellwether for the industrial sector, dropped 1.8%, bringing its loss over the past 2 days to 7% as investors fretted about a potential economic downturn.